All right, I need everybody to go on Rumble right now and follow my page so you don't miss out on any videos or live streams. Anytime I share the links on X, they get hidden due to the fact that we are no longer allowed to post external links on X that get broadcasted out to everybody. So even if you have your notifications on X, you might not get it. So follow, turn the notifications on. That way you don't miss any of the free content I'm putting out here in the future. All right. Welcome back, everyone, for another weekly prep. This week, prepping for the week that starts on October 14th. We got a lot to get into here today. We had a lot of wins this week and also a loss that's really bothering me. So we'll get into all that here shortly. If you're watching on X, drop a like, share it, comment, let me know, quote, tweet it. I'll retweet you. If you're on YouTube, drop a like. If you're on Rumble here, drop a like. Join the chat. Let's get it popping in here. But we'll get into everything. I want to roll over a bunch of names of my own, and then there's a few that you guys had commented on the post from earlier this morning that we'll get into as well. So let's share it up. Where are we? Whoops. I need to pull up my trading view. That would help. All right. Hold on here. Okay. We're good. Okay, so as always, we'll start off with the big board indices right now, and then we'll work our way into some individual names. So first things first, when we take a look at NASDAQ here, I think we're pretty much on the right side of things here. The only difference was I don't know how tradable really a lot of this action was within last week's candle. We'll get into that when we crunch down on a time frame here, but it looks like the drawn liquidity is pretty clear at that 20,538. That will also fill up your weekly bearish showtime imbalance. Okay. You will notice that there is a bit of divergence between the indices here. So you have NASDAQ, who is not currently at all-time highs, while you have ES all-time high. You have Russell also not at all-time high. You have Dow all-time high. Okay, so there's a bit of divergence there. And there is one key missing ingredient here that we're going to look at today, which I think is going to begin to play a major role in this continuation type move that we see. So let's drop it down a little bit in time frame. We'll go over to NASDAQ here. Okay, and here's what I meant by, I don't know how tradable this is. So really, even us retracing back down into this bullish breaker, low, high, lower low, break up and through, and we would anticipate the high of that sequence, that candle, to act as a support level moving forward. And there it is. Okay, you got off the breaker high and you're running higher. Now, the thing is, that really isn't inside discount of its current range, which will almost immediately deter me from taking action on this. In addition to that, we didn't really have any imbalance here, right? Other than this breaker, which that could be a viable model in itself, which is fine. But for me personally, I would prefer it to get down into discount prior to catching that run. So despite us feeling as though price could bounce off of that breaker, I don't know how tradable it was. And even when we get to smaller time frames like the hourly here, you're going to notice that if you're using any of the concepts that I'm using, it really wasn't all that clean. So we'll drop back. We'll go back just a little bit in time. So this is from an hourly perspective here. And you'll notice that we have a lot of ugly little lows right here. Okay. In addition to that, we also left an ugly low yesterday. Okay. And what do I mean by ugly low? Lows that are being created from smaller time frame levels, leaving behind relative equal lows. Right. And as we know, what had to have happened here in order for price to bounce, right? The only logical explanation would be buying, right? What had to have happened here in order for price to bounce where it did? Buying. Okay. And if that's the case, these are resting stop losses below. That's a lot of liquidity chilling out down there and above here as well. Now, on the flip side of that, you could also say, well, wouldn't this be relative equal highs? And you'd be totally correct, right? We've filled up this imbalance multiple times. So really, to start off next week, I'm looking for something somewhat like this. Okay, where are we? Here, get us into this hourly imbalance for a run back up to that 538. And beyond that 538, do we see, and this is really a place where I need to see some additional information, do we see that expansion move up and through? Do we create the imbalance up and through to give us some insight that price wants to ultimately get up into all-time highs on NASDAQ, or are we just going to fill this imbalance and roll over a little bit? Remember, we are not discounted. We have a really large range at this point. What would be the indicating factor that we would actually maybe take out this 538, fill up this imbalance, and ultimately start our descent back down into discount? And simply put, until I see an imbalance in the inverse direction of this overarching trend, which is bullish, I think it's fair to say, taking out these highs right here with that price run, that would lead me to believe this is a bullish price run. The only thing is this range isn't currently set. There has not been one bearish imbalance in this price sequence here to indicate that price wants to go see discount of the range. All good, all great. But in the meantime, following that 538 sweep, because that's where I believe price is going based on what I have seen here, and we even have an imbalance to kind of structure that. At this point, beyond that 538, I got to see what happens next. Do we see that imbalance move? If we get that imbalance move, then I could see a continuation. If we sweep that high at 538, pull back and immediately create a bearish imbalance, at that point, I'm going to, start to think, okay, where's discount in this range? And, in this range specifically, just on your hourly, which I'm also not even so sure this holds up due to the fact that our hourly range is actually much bigger. This is just a more immediate price run. That's our hourly range, and this is discount of that hourly range way farther down. And I'm not saying this is going to happen, but if in the event we do create some sort of daily or even a weekly imbalance, I would be anticipating price to retrace back into discount of that current range. Okay. So if anybody has any questions about that, feel free to drop them over in the comments, and I'll get to it here shortly. But that would be the kind of game plan here for me, at least on NASDAQ. Now, as I move over to ES, I say this a little bit here and there, but beyond all-time highs, we really don't have ample information. What does that mean? What would be your draw on liquidity up here? You really don't have any because price has never been up this high, right? So at this point, you're going to hear people saying, oh, I think we're going to 6,000. I think we're going to this. To me, that's just a guess. There's really no fabric behind anything there to indicate that 6,000 is the exact mark that we're going to see, right? There's no liquidity up here that we can use as a target, right? In this situation here, we had a target, right? When you retrace down into discount here, you could have said to yourself, okay, I think we go to 5,782.25. Why? Because price has been here. That's our draw on liquidity after a discount retracement into a bullish imbalance of an overarching bullish trend. And that would be your completion of the mana model right there, 5782. Okay. So that would be the game plan on ES a little bit. It varies a little bit, but also if you look at the daily on ES, also has not yet gotten into discount either. But now here was that little missing ingredient that I wanted to throw into the mix. I bring this up sporadically. It can be very useful, but sometimes can also, in my opinion, bring in a little bit of analysis paralysis, a little too much. Okay. So, but I am bringing up the dollar, DXY, and in a perfect world, you're going to see these moving in an inverse fashion. You'll have dollar, for example, moving higher, indices moving lower, and vice versa, right? Indices moving higher, we'd anticipate dollar moving lower. But to me, the draw on liquidity, or where I think dollar is going, is actually lower. Okay. I believe that these relative equal lows are going to get swept at 99.57. Now, where we currently sit, this bounce, is this radical or anything like that? Not necessarily. We swept liquidity. We can justify that bounce. We got into discount of your bearish range, not quite into the imbalance. So you will notice what I wrote this in while we were on stream on the 9th, whatever day that was. Watch what happens here. Refer back to stream on 10/9, and we'll go back to that. But for those of you who weren't there, I will explain. Now, when price gets up into this discount imbalance, I am anticipating a rejection from this point and ultimately to look lower for 99.57 to complete the bearish Mando model that dates way back to our highs all the way back in September of 22 down to our lows in July of 23. You got your discount retracement here into a bearish imbalance. And so far, we have not flushed that low to complete the Mando model, which ultimately I believe we will. Now, if I believe that dollar's ultimately going lower, it still has a little bit of gas in the tank, in my opinion. But if I believe dollar's going lower here, that in a perfect world, would insinuate that indices would continue to move higher, which I also believe in, honestly. There's still a lot of setups out there that I do not feel have taken care of business and completed at the moment. But we are approaching that rapidly, in my opinion, on a lot of names. We're getting there. Not quite completed, but close. Um, but anyways, that's ultimately what I wanted to bring up on the dollar. I think it's got a little bit of gas. So 103.54. And inside this imbalance, I am anticipating price to get in and get out and ultimately start heading for that 99.57 sell side liquidity to complete the bearish Mando model here on the weekly time frame. So I know that was a lot, but if anybody has any questions, again, feel free to just drop it over in the sidebar and we will, review it. So that's dollar. And now I think we'll go into some individual names. So some individual names that I want to look at, we'll go through some of the names that have completed my model on a weekly time frame. We'll go into my clunker of the week, and then we'll look forward a little bit here. So first things first, let's look at, where are we? Okay, the first one I wanted to take a look at was MSTR. Okay, so MSTR here, closely associated with Bitcoin, and I also want to show you guys something regarding Bitcoin here as well. But MSTR was a name that I had posted about in August. The stamps are, I actually made like a little mini thread on it yesterday if you want to check that out. But that's where the post initially came from at about $130. But I had said, at that point, Mando model completes at 200. Why? We took out this high here with that price run. We got our discount retracement and left behind relative equal highs. And, finally in August, there's your 130 when we had talked about it, and ultimately got up through this bearish imbalance. Now, this bearish imbalance at this point is completely unnecessary. I just wanted to show you the reason as to why price would reject from this point. But there it is. There she goes. That is completion of the Mando model. And just like what we said on SPY, we are at all-time highs at this point in terms of, I think we go to 280. I think we go to this. I don't have anything for you. And really, I don't think anybody does with any bit of, certainty. I think it's just a guessing game at this point now that we are above our all-time highs. Does not mean that we cannot go up, right? But what is the draw on liquidity? That's the question to ask. Is it higher? It could be. Is it lower? It could be. There's nothing indicating a specific level due to the fact that we are currently at those all-time highs. But that is MSTR. That was the first one that had completed this week. And shout out to Debbie for bringing it back up on stream, because that turned out to be a sweet trade for me. But that was the first one. And that came after a nice little run up here on another name that I'd been looking at for some time now, and that is Palo Alto. Again, these are all timestamps. You can go back and look at them yourself. But here's your price run on Palo Alto from your low in November of 2023 to the high of February 2024. We got our discount retracement into our bullish imbalance here on the weekly time frame, and ultimately just the grind higher. Here it goes. Ultimately, 380.84 is where the Mando model completes. Our smaller time frame Mando model completes, and we will get to that as well. But I just want to show you again, why would price kind of run into some trouble here to cause this retracement? And simply put, you had a bearish weekly imbalance chilling right there. Okay, there she goes. There's your retracement. Here's your turtle soup. Here's your bullish imbalance, and there's your run for highs. So inside our overarching bigger picture, higher time frame Mando model setup, we had a mini Mando model that took place inside. So following that retracement and run through this high right here, we have our low to our high. We got our discount retracement right here. That's 50%, right? Bullish imbalance. And in addition to that bullish imbalance, you had a bullish breaker right here. Low, high, lower low, break up and through. Here's your retracement back down into discount and the breaker and a bullish imbalance. And there she goes. She's gone, right? Again, I just have this imbalance on to show you where the rejection initially came from, and this one as well. But at this point, we have completed the model yet again, and now 380.84 is in the crosshairs. That's where I believe price is ultimately going. If there are retracements that ultimately create a weekly imbalance here prior to getting that 380, that's going to be another opportunity for me. But right now, right at this current moment, there's not much cooking here for me. What are we playing for $7? That doesn't seem all that great, but another name that turned out to be awesome, and was playable on both the smaller time frame and the higher time frame. So that's Palo Alto. The next one I want to talk about, I got like 3 more of these, and then we'll talk about the loser, because I'm sure a lot of people want to hear about that. But we will look at Upstart. Upstart, another one that was talked about when we were at $20, $25, $26. Here it is. So if you were to zoom out on Upstart, which I think is very important to do, really any name, but Upstart specifically, you have a large bearish range, okay? And if you've watched me for a while, you will notice that price often likes to go back to discount of its current range, okay? And I think that would be fair, right? We've seen it happen quite often. There was no split here, just an absolute destruction of a ticker. But by taking out this low right here, your opening price at 23.05, you shift market structure bearish on a monthly time frame, which is fine. But again, when that happens, I have a model set up to allow us to take action on this. And we call it the odd NAM. It's basically just Mando model backwards. And what we do is wait for the first imbalance to form. And following the first imbalance forming, we like to see price get up and start moving its way up towards 50% of the range. And that's what we're beginning to see here. Low to your high. Here's your discount retracement into a bullish imbalance. Ultimately, we have smaller time frame Mando model completing at 49.62 with the higher time frame at 72.58. Odd NAM gets you way higher into discount, and we'll talk about that later on. But then your next really mark would be this bearish volume imbalance up there at $3. So now if we were to go back down again, inside that bigger picture, you had a smaller picture painting. Low to your high. Here's your discount retracement into not only a bullish imbalance, but also a bullish breaker. There she goes, up and through to complete the Mando model here on the weekly time frame at 45.71. The next area of buy-side liquidity resting at 49.62. And now that's an area just like NASDAQ. Do we see the continuation type move with the imbalance up and through, or do we see a sweep and retracement into one of these imbalances down below? That is the question. Again, this imbalance here it's nothing anymore due to the fact that I just wanted to show you where we had rejected to bring us into discount, right? Every single move that happens on this chart can be justified completely, okay? So anyways, that is Upstart, just another one that was, talked about 2 months ago that ultimately took care of business. Now here's your next, Affirm, from your low up to your high. Here's your discount retracement into not only a bullish imbalance, but also a bullish mitigation block here on the weekly time frame, monthly breaker. But from your low high discount retracement into a bullish imbalance, and almost run for high. 52.48 is where that Mando model completes, but that was talked about at $23, and we're now at 47. So over 100% on the underlying, just well in advance. Again, these are posted well in advance. Now, one key takeaway from this is we had a low, high, lower low, break up and through, retracement back down into the breaker, and boing, right? Almost there. We will shortly. But now here's the thing. This lines up a lot with what we were talking about just a little while ago here on NASDAQ, where we had the breaker. It was just in premium. Very similarly. Low to your high, breaker in premium. So not necessarily the most, gung-ho about that setup for me personally, but look what happened. Okay. It's still a beautiful run, and that completes following the breaker to take out that previous high at 47.98. Okay. So not quite my setup, but valid setup nonetheless, right? Some people just use breakers as their strategy, and that's fantastic. You don't have to trade like me specifically, but if you use some of the tools that we talk about, it can be very, very helpful for you. But now where we currently sit, we created a bullish order block on the weekly, gap down into a bullish level here, ultimately painting the order block, taking out liquidity with 52.48 resting above. Now, just like Upstart, where is Affirm's 50%? Way higher. 92.73 is where 50% of that range is, with the bearish imbalance just below it. Okay. And here's how beautiful it is on the monthly time frame. I think my post said something like, this is the best risk reward setup in the market right now. That was when we were down here, about $23. Low, high, discount retracement, bullish imbalance, bullish breaker. See you later. No monthly imbalances in this range. Okay. The next monthly imbalance is way higher. Okay. Just take note of that. So that is Affirm. Just another one down. So I think there was one more. What was the last one? Oh, Robinhood. Okay, let's take a look at Robinhood. Okay, from your low to your high, here's your discount retracement into a bullish imbalance. There is your run for highs into the monthly bearish imbalance. 50% of that range is way up there at 45.91. You know, that could take a lot of time, but I kind of mapped out how I think price might pan out from here, where we get into this imbalance here on the monthly, ultimately retracing back into what would be the new formation of a bullish imbalance for your next little Mando model run up and through. Okay. Now, one thing about Robinhood that is pretty, how do I say this? It reminds me of something else that we just saw, where company relatively new. I know you might say 2021, that's 3 years ago, but we don't have all the data in the world here. But this reminds me a lot of Palantir. If you were to look at Palantir, you'll see that initial move taking out that all-time low before ultimately making its run higher. Now we could shift market structure here on the monthly up at 41. Like, the way that I look at this is like graduation of a new company. All right, you graduated, you beat a bear market, and you are officially a real company. You have a bullish market structure like 90% of the other blue chips. Congratulations. You know, that's the way I look at it. But the way that Robinhood and Palantir match up in a sense is that over this 50% mark, notice how swift price moved. There were no bearish imbalances here on the monthly time frame, right? So while price could hit that 45, which I think it's going to, and ultimately retrace from that point, it could, right? That shifts market structure bullish. At that point, I'm anticipating a retracement into a discount imbalance for the next run for highs and for a continuation move, right? So again, this is like graduation. And while, you know, Hood is still way far behind in terms of Palantir, you'll just notice above that 50%, there's no bearish imbalance on this higher time frame. So that's just something that I'm, you know, keeping tabs on, just due to the fact that, you know, really is a relatively new company. And Robinhood also had some bullish flow this week. So, anyways, those are just some of the names that I wanted to run through this week, or I guess had completed. We'll get into the individual names, and we'll talk about the loser as well. But before that, let's talk about the real world. Maybe not. No, we won't. We'll give it a shot. Hold on. Let's see. No, we can't. Okay, that's fine. All right, so let's talk about the clunker, which really stunk. Now, it is Tesla. Okay, Tesla obviously had that event, and I wonder if you guys can go back and check this. You should, and if you can't, I'll screenshot the chat from that night. So here's the thing. On Tesla, we had the event on Thursday night, I believe it was, and price had reached higher. Ultimately, I'll show you where it does it on the smaller time frame, and dumps, right? Everybody was talking about the dump on Tesla yesterday, down almost 9%, $20 dump, blah, blah, blah. Now, with Tesla, you have multiple sets of relative equal highs on the monthly time frame here. You have no structural shift whatsoever in terms of your overarching higher time frame setup. Okay, nothing. Now, if we were to scroll down and look at smaller time frames here, okay, you will notice we have a low to our high. We got our discount retracement into a bullish imbalance. We got a run not quite to the high and ultimately melted into this volume imbalance. If we take a look where this volume imbalance is on the weekly time frame, we have a and actually, before I show you that, look, okay, so inside this little intermediate run, this is just a smaller time frame Mando model cooking. Low to your high, here's your discount retracement into a bullish imbalance. There's your run for highs. Mando model complete. On to your next. From your low up to your high, discount retracement into a bullish volume imbalance. Run for highs, question mark. That's the question I have. Now, here's the thing about Tesla. We left relative equal highs above, right? 1, 2, 3. Okay, we left all of those there intact. So when I took this trade on the, as an options trade, the shares I don't care. I think my average is 187. I got a lot of cushion there. But with the options trade, I didn't anticipate price after getting down into this weekly bullish imbalance. Ultimately, I saw the reaction to it, and I believed that price was going to go see 271 and clean up some of these relative equal highs immediately. And that was the problem. I was wrong, right? So if we were to go into even a smaller time frame, and we look here on our daily, okay, same situation, low to your high, you got your discount retracement. You're still inside this bullish breaker, bullish imbalance here as well, with the weekly volume imbalance and a gap down into discount of that range. So if you look here, you'll notice that we had this daily imbalance, right? We never really separated from it. But to break it down into an even smaller time frame, if you can, I'm not sure if you still can or if Robinhood allows you, but go to the overnight data on Robinhood and see what that overnight high was. That overnight high got you into the showtime imbalance. And from that showtime imbalance, we rejected, right? So, even despite an overnight move where, this is so manipulated, or this, doesn't make any sense, we ran, or, this was a sell the news event. Was it really, though? Was it really? Or was there just a bearish imbalance sitting there that ultimately didn't go the way of the bulls? They're named Showtime for a reason, right? It's an area in which, in a perfect world, it's during market hours, and I have the ability to maneuver immediately off of that level. But the difference here was there was no maneuverability due to the fact that it was overnight, and you can't trade options overnight. But every single move can be justified. It's not a sell the news. It's not happening in random positions on this chart. There's always a reason, and there's always one when you look left. Okay. But that's Tesla. And as you can see, ultimately, based on my analysis here, nothing really changed with Tesla. It was an unfortunate event. Ultimately, price goes to 271 to complete the Mando model with a 278.98 additional relative equal high buy side draw, followed by, last but not least, 299.29. And to look at this from even a higher time frame picture, from your low to your high, discount retracement into not only a quarterly bullish imbalance, you also have a yearly bullish imbalance, which we've lifted off from. And ultimately, I want to see price go up to that 414.50 over the next year, however long it takes, whatever it is. But that's where I think Tesla is ultimately going. So small time frame fluctuation inside a bigger picture that looks a-okay. So that would be Tesla, and that is our biggest or the clunker of the week. So, Jartel, are you in the group, or did you put it in the sidebar? Yeah, I'm just going over the names that I want to look at. So now let's see. Let's go to our next. I want to show you guys something with Bitcoin, right? Because a lot of the miners, it seems as though they are getting some loving. You had MSTR complete the model. You had Coinbase getting a lot of flow this past week. And it's just one thing I want to look at. So we'll pull up Bitcoin here. And where are we? We can look at it from this right here on the weekly. Let me pull up the right one. Okay. So let's take a look at Bitcoin. Beauty. Okay. So now you have your low to your high. You got your discount retracement into a bullish imbalance. So far, so good. We swept liquidity here up at that 65,103 and got back into a weekly imbalance from last week after taking out last week's low. So it was a nice close to the week. That was important. Now, with Bitcoin, where we currently sit, you will notice that despite having ample buy-side targets, right, these blue lines with no imbalances in between, price has been pretty fickle. And I want to show you guys this over on Edgeful. Where is it? Here. Let me share this screen. Okay. Let me know. This should look pretty clean right now. Yeah. Okay, it looks good on my end. All right. So if we're taking a look at Edgefield here, one thing that you will notice is that this is kind of justifiable, right? We're looked at from the higher time frame perspective, and we noticed that price was pretty fickle over the last couple of weeks, and this even indicates for a longer period of time here. So we're looking at a 6-month range, right? And we're just looking at smaller time frame price action that occurs within that 6-month, right? And you might say to yourself, "Oh, well, I noticed that Bitcoin, early in the morning is pretty volatile, right?" Well, Edgefield gives you the opportunity to actually have some data to back that claim, right? So if you're to take a look here, you'll notice that over the first 15 minutes in the last 6 months, we get a 70 or 67% probability that price is going to take out that opening range low and high. Okay, that's a double break. Okay, so when we get early morning volatility like that, also when we take out lows and highs, we're really accumulating liquidity in doing so. So if we're accumulating liquidity, ultimately we're setting ourselves up for what I would deem a relatively strong and large run, right? Based on what I have on the higher time frame, to me it suggests higher. And right now we're kind of in that consolidation, grab liquidity to set us up for what could be a pretty substantial, expansive type move. So that's just one thing. The flow would also back that up. But I wanted to show you guys this because I think Edgefield does an excellent job in kind of solidifying ideas that you might have, but you don't have the numbers to back them, right? You might say to yourself again, wow, Bitcoin, it's very volatile in the morning. I noticed that oftentimes it's making a knife or a rip move and then immediately giving it back, right? This is data to actually back that claim. And that's something that I like to, kind of express on here is that a lot of the things, whether it's said by me or anybody else you see on the internet, it should be something that's able to be back tested, right? And if you can't back test it, that could just be someone, throwing their opinion out there without anything to back it up, maybe because they're holding calls or something and they can't really justify their explanation. And I think Edgefield does a great job at that. And, obviously there's a multitude of different, you know, strategies that you can incorporate with data to back them. So, but anyways, I just wanted to show you guys that because I thought that, we've been talking about it in the group actually on how Bitcoin has been really fickle, right? We're anticipating those highs over and over and over again. And then ultimately we get them. And it's essentially a retracement. And it just brings you to the point that are we in that accumulation phase to set us up for that big time run? And that is something that I'm looking at personally as I see on our weekly time frame that we do not have many higher time frame levels to kind of interrupt our current setup there. So, but that is Bitcoin. That was what I wanted to show you guys there. So now we will look at some names that had been commented by you guys. And then I had a list of about 6 that I want to show you, and I'll pull up the flow to coincide with that as well. So first we'll do yours, then we'll do everybody else's, or then we'll do mine, and then we'll get out of here. So where are we? All right. So the entire S&P top to bottom, please and thanks. No, thank you. I know Magic's trolling, but cool. Thanks for being here, Prime. Okay, net, sure. Yeah, we can continue to look at net because this is one that I had posted in the newsletter this week. If you don't get the newsletter, sign up. It's free. Just go into my bio. You'll see it. It is Markets with Mando. It comes out Sundays. I'm sorry, Sunday night or Monday morning, depending on when I get around to putting it together. But there are some setups in there that I don't frequently talk about on the live streams that I put in there for those who, support the content here. But we'll look at net because that was an absolute banger from last week. So let's look at it from the higher time frame and work our way down just to show you guys where I kind of came up with this setup. And I meant to talk about this one earlier, but I forgot. Anyways, so we have a large range. Some would say this looks like a Mando model setting up, and some would be right. So inside your discount retracement on a much higher time scale, you have a mini Mando model that completed low, high, discount retracement, bullish imbalance, run for highs, low, high, discount retracement, bullish order block, run for highs, low, high, discount retracement into a bullish imbalance, run for highs, question mark? You tell me. So 116 completes the Mando model here on a smaller time frame, and it gets you back up into 50% of this overarching range. Ultimately, I think with a lot of time, 221.64 is on the table. We have a massive bearish imbalance here that I think would slow price up when we got into that. But just a total awesome setup there. And yeah, I'm glad you crushed it, man. That's cool. So that's net. Let's take a look. Okay, I guess we could talk about this one. CLSK. Okay, so you have a low to a high. You have a discount retracement into a bullish imbalance. So far, so good. We're hanging on a bullish order block. So let me just start by saying this. This could very well go higher. This is not a setup for me. There's no imbalance here for me to justify this. You have an order block. That's about it. But from this point, ultimately, from a monthly perspective, you really want to see this monthly close above the previous month's open at 1019. A close above there creates a bullish order block on the monthly. That's really encouraging. Here is your weekly. Okay, from your low to your high, here's your discount retracement. This is really a sloppy setup. Yikes. Okay, that's a bullish volume imbalance. Price got into it. So far, so good. Left behind relative equal lows. Not all that much of a problem, but we are banging around with this bearish imbalance. So for me personally, again, like I said, this is really not a setup for me due to the fact there are no higher time frame imbalances. But a move above, I know this is going to sound crazy. You're going to say, I missed $3. I really have zero interest in this until we get above 1275. That creates a weekly bullish breaker, low, high, lower, low, break up and through. We would anticipate the high of that sequence to act as a support level moving forward. Relative equal highs up here. Mando model ultimately completes at 2472. But again, this if I'm not mistaken, this company also they did some sort of share reconstruction and kind of watered it down. So if I'm not mistaken, I could be wrong on that. Somebody back check it for me. But that is what I see there. Very similarly to Mara. The only difference on Mara, why I like Mara better, is because if you look on the higher time frame here, you will notice we have an imbalance that I can use as the structure for my idea. Unlike CLSK, again, the number to beat here is 1884. Above 1884, I think it's time to go. I think that's when Bitcoin will get its break, and have a nice time. So anyways, those are some little minors that I want to talk about. But all right, let's head over to Amazon for our boy Bams, who crushed it this week. There's your low to your high. Here's your discount retracement into a bullish volume imbalance, right? Discount below 50%. There it is. And ultimately anticipating a run through highs at 201.20. This could take a little bit of time due to the fact that we have a showtime imbalance. Ding, ding. There it is. It's not there for show. There's fabric behind it. And there's your rejection. But last week we got into a bullish weekly imbalance here, swept the previous week's low to turtle soup, and ultimately a nice move. So I personally think we see 195.35 before, and then ultimately 201.20. But I think this is enough. We couldn't get through this imbalance in one shot. So what do we need? We need more liquidity. Where can we get it? Right in this imbalance, and we had a nice reaction off of that, creating a weekly bullish order block. So I think Amazon looks good as well. Let's keep on rolling here. We got DraftKings. Okay, DraftKings. All right, from your low up to your high, here's your discount retracement into a bullish imbalance. So far, so good. The only thing here is that we are running into yet another bearish imbalance. But if it's going to bounce, this is going to be the spot to do it. Bullish weekly imbalance, similar to Amazon. We are close to completing the model here on the weekly time frame, and we got into an imbalance here. The only difference between this and Amazon is that we did not take out the previous week's low, where we did so on Amazon to give us that snappy type move. Haven't done so, doesn't necessarily need to happen, but I would not be interested as an outsider until we saw that occur, honestly, for me personally. But yeah, got relative equal highs up here as well. 49.57 gets it done. And again, this is very similar to what I was talking about on Robinhood, what I was talking about on Palantir. I know you might say, oh, well, it's been around for 5-6 years. In the grand scheme of things, this really doesn't have all the price information in the world, right? is this company going to graduate, or are we going to see a rejection from this point and us hovering inside the same range, right? Graduation would really be above all-time highs to shift market structure back bullish, and that's above $74. But not bad, not bad. Gives you a little bit of structure there. Okay, we talked about Bitcoin. Sure, we can look at Microsoft. Yeah, this is one that I was going to bring up in a little bit, but here's Microsoft. So let's zoom it. Okay. Let me zoom it some more. Hold up. Okay. So on Microsoft, we have a low to our high. We got our discount retracement, turtle soup. We swept liquidity in the inverse direction of our overarching trend, getting us into a bullish imbalance. And whoa, ran into a brick wall here. What is that? We'll get to it when we go into a smaller time frame. There's your weekly imbalance. That's up at 448.39. Very, very bullish flow would come in, but when we go over to cheddar flow, I'll show you guys that. Now on the daily time frame, this is where, because on the weekly right now, it's not clear cut. It's really not clean. Okay, we actually created a bearish imbalance here on the weekly. That can get cleaned up due to the fact that we haven't left this bullish. But what is our current drawn liquidity? That's the question. To me, I think it's higher, but I'll explain. Here's your daily, right? So here's your first little Manda model that had completed from your low up to your high. You got your discount retracement. Here's the bullish order block. Again, not really my setup, but plays nonetheless. Run for highs. And that's kind of what you can envision on a CLSK, where, again, it might not be my setup, but that doesn't necessarily mean that it can't happen. Everything else is in order. But here it is again, low to your high. Here's your discount retracement into a daily bullish imbalance. And so far, so good. We have relative equal highs and lows below, which gets slapped. That's the question. Ultimately, this is the showtime imbalance. You beat that 422.25 area. I think it's off to the races. But that would be the area in which I'm going to do it now. So when it happens, I can't, nobody could say, oh, well, you didn't have that there. Now you have it there. No. It's always discussed. Showtime, baby. Okay. We'll just leave that. All right. So that's Microsoft. We'll show you the flow in a little bit here. All right. Let's look at Run. This is one from Surf Dog here. Run. All right. So here's what we got on Run. From your low to your high, you got your discount retracement. Run for highs. Beauty. Okay. So here's your next little run. Personally, would not be any interest in this unless we get to 1436. That is a discount bullish imbalance right there. Okay. Yeah, we got a mitigation block here, but I don't trade off of those. You do have a bullish breaker, low, high, lower, low, break up and through. So you are in a breaker. It's just up to you. Does the risk reward add up for you at this point? Are you willing to risk $6 to the downside for a potential loss? Or would you prefer it to make it, a potential $3.80 loss? That's I always look towards the lower end. And if I miss it, I miss it. But otherwise, not bad. I just think get a little lower. And you got a lot of relative equal lows down here that I don't love, but that would be Run. All right, let's keep going. We did Upstart, we did Mara, we did Affirm. I'll do a CLH from Truth. CELH. Okay, so low to your high, you got your discount retracement deep into a bullish imbalance, and you also have a bullish mitigation block and a bullish breaker. Low, high, lower, low, break up and through. If you actually care about improving as a trader, I want you to go back to last week's weekly prep when we talked about Celsius and when we said it was really a do or die type of situation. You were as low as you could potentially go without disrupting. The only thing I don't love about it was that we left 28.13 relative equal lows. Otherwise, higher time frame, it's okay. I've been accumulating this down here inside the monthly breaker. Here's your weekly. We filled every bullish imbalance here on the weekly and so on. So for me, low risk, high reward, and something that I like those. All right, let's look at let's see. Okay, we can look at Apple. That name looks familiar. Who requested Apple? But I'll give you the benefit of the doubt right now. Here it is. From your low to your high, here's your discount retracement into a bullish breaker and bullish imbalance. There's your run thus far. We swept liquidity here, got down into discount. So while this is not really my setup, this is one that I would equate much more to a Microsoft type setup where not as clear cut as the others, but decent enough. Let's see what we got on the daily for Apple. Okay, we have a low to a high. We got our discount retracement. There's our bullish imbalance. We got our run for highs. That was our completion. So here is your next little price run from your low up to your high. No discount. What does that suggest? No range set. There's your range setter. Discount retracement, bullish imbalance. I kept this on just so you guys could see the rejection from that point. We don't need that no more. And here is your discount imbalance, just so you guys can see it. We created a daily bullish imbalance similar to the hourly on NASDAQ, actually, where I do think that we're going to get down into this imbalance and ultimately leave and go higher. 233 completes the daily Manda model, with 237 completing the weekly. That would be Apple. So with all of that, we will, I'm going to run through just a few names, and I'm going to run through a few names. And what I'm going to do, though, I'm going to show the charts first, and then we'll show the flow. But the first was NVIDIA. And let me show you on the weekly. It's just a little bit more clean and easier on the eye. Low, high, discount retracement into a bullish imbalance run. Are you getting tired of hearing me say that? I think you might be. 140.76 completes the Mando model there on the weekly. Okay, just got some levels that we'd already previously filled, just slowing down the process here. That's about it. Okay, we'll look at the flow on that one shortly. PDD, this is a name that we talked about a while ago, but let's bring it back up. So we did get into discount, bullish imbalance, swept liquidity in the inverse direction of your overarching trend. So far, so good. There's your immediate run. Now, there was a lot of flow on this, mostly leaps. But we have a bullish weekly imbalance there that could be used as structure. For me personally, it's not discounted, right? If it was discounted, I'd love it. It's not. But we could see an expansion move off of that. And I just thought, to be fair, it was one of the top flow getters. I had to cover it. So PDD, a lot of bullish flow, mostly leaps, but that was another name. How about this one? AMD, absolutely smoked, right? Sold the news event. Not really. We just came back and back tapped the high of this mitigation block and recovered very, very nicely. This monthly setup is another one that I believe I said the words, absolute gas. Low to your high, you got your discount retracement, bullish imbalance, also bullish breaker, low, high, lower low, break up and through, retracement back down into that breaker. Smell ya. 187.28 is the mark on that. So that is AMD. 187.28 is that buy side liquidity draw. Here it is on the weekly time frame. You get that, you create a weekly breaker, and the sky's the limit. 227 completes the Manda model on the monthly time frame. SMCI, this one a little bit lower on the list. Upside wise, really good. It's just there's one problem. With SMCI, you have your low to your high. You got your discount retracement into a bullish imbalance. You actually created turtle soup and ultimately created the breaker. So the way that I look at this is my range. If this makes sense to me and this is tradable, let's ride. If not, no dice. But it is working on a pretty big level that could slow price down. That's why it's a little bit lower on the totem pole for me in terms of speed. In terms of this move, I think could occur, but really nice in terms of how we have that broken down. We talked about Microsoft and then Coinbase. I don't know if we didn't do Coinbase. Let's pull it up. Okay, where's Coinbase? Here. There we go. Low to your high. Here's your discount retracement into a bullish imbalance. If we get above 211.92, kiss it goodbye. That is the formation of a weekly breaker. Low, high, lower, low, break up and through. I would anticipate that high of the sequence to act as a support level moving forward. Looking for 272.55 and 281.99 relative equal highs to complete the Manda model there. So let me pull that up on Cheddar Flow so you guys can see it with your own nerd eyes. All right, let's pull here. Let's go. Let's share. I'm just pulling it off. Good. Okay. Here it is. Share. Okay, you guys should be able to see no problems now. All right, so let's pull over. This is how I go through the weekly flow setups here. I go from beginning of the week, whatever name I want to look at, and I'll do this as a search. So this way I get the weeks full of flow. Also, I don't know if I expand this, it's going to make any difference. No, it's all right, right? I think it looks pretty good. Okay, now we'll come over here. The first one we'll just do is coin. So coin over the last week, notice 10 million to 1 million call to put ratio on that one. Okay, and obviously you can mess with the filters, but I'm just concerned with this. Look at the premiums. That is where I'm really looking. Now, a lot of these are leaps in the money, but ultimately these are getting hit pretty frequently. And here's the thing. I've been talking about Coinbase for like 3 weeks now. And let's just go over, 3 weeks. Look at the flow differential here. Massive, massive, massive. So this just kind of solidifies my thesis regarding Bitcoin and me thinking Bitcoin's going higher. Just bolster it up a little bit. Here's Microsoft. Yeah. November 405s, quite a bit. And if you can continue to scroll down, you'll see that we have a multitude of different strikes getting hit here with a vast difference in the call to put ratio. Next up is SMCI, another one. This one actually had a bunch more oh, I'm sorry, this is over the last couple of weeks. Let me clear this up because we already had a pretty big move on SMCI here. Over the last week, we had 46 mil to 19 mil. But you will notice also 815 25s. This is really the closest deep in the money call. And then similarly to those 2025s. That builds off of my idea that getting into that weekly imbalance, this could take time, right? And with that, I need to have time on those contracts. And if there are other better setups, I'm going to go elsewhere. Here's AMD over the last week again, 66 mil to 26 mil. A lot of bull flow here, specifically the 11/8. See a bunch of these as we scroll down throughout. But that is AMD. We'll go to PDD. Here you'll see those leaps with 1/16, 2026, $100 in the money. But quite a few of those, 86 million. So this was the second biggest hit of the week. And then finally, the king, need I say more, 684 million to 116 million. And yeah. So that is what I wanted to share on that. But all right, well, I think we got a lot covered here. So let me just check the chat, see if anything, and then if not, we will okay. Yo, dude, don't rush me. I got a plan here. When Edgeful Mando model data. Not a bad idea. I got to figure out how to code that. Anyways, all right. That's all I got. I'll catch you guys. Have a good weekend. And where are we? Good luck next week.